What else will happen, don't know. But as long as people use the branches and they're adding value in the communities, then, that's what it's all about for us.
I'm delighted to be joined today by Sue Hayes, CEO at Nottingham Building Society, to talk a bit about the sector itself, the meaning of mutuality, and find out a bit more about what's going on at the Society. So welcome, Sue.
Thank you very much, and thank you for the invite.
Awesome. So I'm keen to start off, I guess, with a bit of your background and a bit of a summary of Nottingham Building Society, if that's okay.
My personal background?
Yes.
Okay, so yeah. I have been in banking for a lot of years, and I've worked for all the big banks, mainly in products and customer segments, both business banking and retail, and all the big banks, that is, except HSBC. And then I've worked for a challenger, a startup, and now a building society. So been around quite a bit. In terms of the society itself, I came into this in January 2022. It's a lovely society. People are very lovely in the sector. I find it very friendly. And I found it's really starting to change and to innovate in terms of the technology and the ramping up, if you like, the mutual sector status, but actually doing it with a modern twist. And that's exactly where we are featuring at the moment. That's
awesome. Yeah, and I guess very timely given the 250th anniversary of the first building society. So I'm keen to jump in and talk a bit about what the meaning of mutuality is at Nottingham Building Society, what your take on it is, and what you're doing to get that meaning out there. Yeah, well, we started 175 years ago. A gentleman named Samuel Fox, who lived in Nottingham, set up the idea of helping the poorer people to actually have homes and also to enable and support savings. And essentially, that's what we still do today. I think over the years, the society's moved into a number of different areas, but what we've done with our strategy is really pared it back to supporting people, and we call them extraordinary borrowers. So people who have different lifestyles, and therefore find it difficult to get a standard mortgage. And so we're looking for those segments which are on the up. In addition to that, we're looking at local savings and branches, so we have an impact on the community. The big difference to me is that I think building societies and mutuals, one, we're owned by our members, and two is that we're here for the long term. And so the decisions that we make, the strategies that we have are all about being sustainable in the long term. Awesome. I'm keen to touch on the recent rebrand as well, actually. I suppose that probably ties into Nottingham Building Society's take on the meaning of mutuality. So could you talk a bit about that rebrand and what you've seen, I suppose, off the back of that rebrand in terms of results? Yeah, well, what we found was about 5 years ago, before I joined, there was some research that was done, and the society was trying to work with LISAs, so the lifetime ISAs. And so they interviewed lots of younger people who are the target audience for that. And as you know, LISAs are there to support house purchase or pensions. And in that research, they found that the Nottingham with Robin Hood on it didn't really resonate with younger people. So they actually set up a second brand, and that was called Beehive. So when I joined, lots of people were saying, we're not sure we should have this second brand. We understand that the Nottingham wasn't working, but we don't really think that having a brand called Beehive, which doesn't even mention you're a building society, feels quite right. We also decided, because this was quite an attractive app, that we wanted to put more products onto it. So when we were looking at the rebrand, we did look at keeping it as Beehive Building Society. We also looked at potentially Nottingham Building Society or leaving it as the Nottingham. What we found was the word building society was the most important thing to young and old alike. And so that's what we've essentially done. The twist that we wanted to put into this was that we wanted to be attractive to all generations. And so we went for a more modern tile type approach in terms of the N for the app as well as for the overarching brand itself. Many people like it. Some people don't like the fact that we got rid of Robin Hood, but Robin Hood is part of Nottingham rather than Nottingham Building Society. So I'm really pleased with what we've done. We've seen some much greater brand awareness. We've seen massive increases in terms of the website clicks as well. So it's started to work, but it will be a journey for us. It'll take 2 to 3 years for us to rebrand everything.
Yeah.
You mentioned as well the extraordinary borrowers. I'm keen to touch a bit on something that seems to be a real focus for the sector in terms of helping first-time buyers, and it's a huge problem, obviously, sector-wide. I'm keen to get Nottingham Building Society's take on first-time buyers, how you're supporting those folks that are struggling to get on the property ladder.
Yes, well, it's a real challenge in terms of the income multiples now. So the average income being what it is versus the house price, it's something like 13 times, which, when I bought my first house, it was about 3 or 4. So it's almost impossible for first-time buyers without help. In addition to that, though, what we found is there is this new generation of millennials and Gen Zs who have multiple income streams. They have side hustles. And what we wanted to do was recognise the difficulty, but also it's doubly difficult when you don't have a regular monthly income. And what we've done is actually tackled this in 2 ways. So one is we're using modern data, technology, decisioning systems to be able to reach those audiences and to create very different propositions. And we've only just started doing that because we've been building the technology first. So whilst we were doing that, we came across another company called Generation Home. And Generation Home have built some really innovative products which are particularly targeted to first-time buyers, where you can have multiple people on the mortgage, or if parents, etc., want to put money into a mortgage, they found a new way where the parent still, or the family member still keeps their part of the equity, but it really helps to enable the deposits and therefore the affordability. So we class that as inorganic lending. So we're not doing it ourselves, but Generation Home, we will have supported to do over £1 billion of lending, and we're continuing to support that as a fintech startup. We also really like the fact they were very purpose-driven in terms of the approach that they take, and they're very customer-focused. So we're both designing our own products, and we've got a lot more to come. We've developed one which is doing pretty well. So foreign nationals, when people are coming into the country and they're coming, particularly in the service and the health industry, they don't have a credit record. So we signed up with another organisation called Nova Credit, which has their credit histories in other countries as well. So we think it's quite exciting in terms of using multiple different partners to help us to help first-time buyers.
That's awesome. And I guess touching on one of those partners in terms of the technology piece, I know that you are in the process of partnering with M-Cube as a fintech, doing things a bit differently in the lending origination space. Keen to get into a bit more detail about what you're aiming to get out of that partnership and where you're hoping that will take you in terms of unlocking potential in lending.
Yeah, good question. So we, as you always do with technology companies, we had a look across the market, and we also have an advisor as well. And we felt that M-Cube were one of the most innovative partners that we could partner with. They hadn't partnered with anybody else previously to us, so that always has its challenges. Similarly with Gen Home, and one of my tech friends said to me that they're going to hate you because for fintechs trying to deal with regulated organisations, the amount of things and checks and everything else that we have to put in place is always a challenge. And I hope that neither company actually hates us, but because we work quite hard to make sure that doesn't happen. But what we liked about M-Cube is it was a tested system, so they were already doing lending themselves in the market, and it was getting some great feedback from brokers, which was really important to us. So M-Cube are the first organisation that we've come across anyway who use AI for document recognition. And they're actually able to read documents and to pull out data points. And we liked that because we think that with that type of innovation, we can make life easier for customers and we can make life easier for brokers. The other thing is that what we didn't want to do is a whole replacement of our stack, because when you do that, it is typically at best a 3-year journey, sometimes 5 to 7 years. And we felt we wanted to use some of the latest technology before you start changing an entire stack. So from start to finish of actually launching residential, we've been soft launched since December, still in that soft launch at the moment, but we hope to do a full launch in the next couple of months.
Very exciting, very exciting. And I think you've touched on something there which is quite interesting around, I guess, the difference between the fintech way of working and a traditional building society, and some of the friction, should we say, that can occur between some of those. I know that your strategy is very focused on change. Change is a superpower. I'm keen to get into that. What's behind that strategy? What's driving the real focus on change at Nottingham Building Society, and how is that actually playing out day to day?
Well, if I may just sort of take you back in terms of the journey that we went on. So in my first year, we did a lot of research, spoke to a lot of people, said, what do you think's great about the society, what isn't? And as a result of that, we developed a purpose. And our purpose is, together we fight for the extraordinary to own their own home. Beneath that, we had 4 drivers, or have 4 drivers and 3 behaviours. And what we were trying to do with that was to really create a sense of momentum and purpose behind everything that we did and the decisions that we made. As part of that, one of the work packages, so we created 44 work packages to get us from where we started through to where we felt the strategy would be delivered and finished. And one of those was this thing called Change Excellence. And it's taken some time to get off the ground, to be quite honest. But all it is really is the organisation, as many, are not very good at change. And we've recruited a lot of senior people. And so they all have their own view as to what good change looks like. And many people talk about agile and it's like the thing to do, and waterfall. So what we wanted to do is really create a consistency of understanding and of the way in which we did change, so that we could be very efficient, very, very customer and broker focused. And we're just kicking it off. So it's going to be a 7-month programme, and everybody in the organisation who deals with change, every ExCo member, every leader, every manager, every person in tech and change will go through this initiative. So there's different cohorts. And the first one is, how do you start a project off well? And somebody else who we work with actually has a great phrase, which I've now coined, which is, projects don't go wrong at the end, they go wrong at the beginning. So we are doing monthly rollouts of this so that we can become a real change agent.
Wow, that's really interesting. I think something that's probably quite unique in the sector in terms of having so much of a focus on change to deliver some of the things that you've talked about already. You touched a little bit on having customers, members, brokers, I suppose, at the heart of that change. What are some of the things that the society is doing to make sure that you don't lose sight of customers, members, brokers through all of that activity and all of those things that are transforming, be they technology or processes?
Yeah, so I'd like to think it started at the beginning. So as I said, we did a lot of research, we did a lot of data points to try and really understand this. We've done exercises where we've had the types of people that we would class as extraordinary borrowers actually come in and meet the board, the executive, spend time with us, talk about what's worrying them in their lifestyle when they're trying to buy a home, whether they've managed it or not. If they did, how did they do it? We've also done something similar with brokers. So we've been doing that for the last 2 to 3 years in a view of trying to get people not to assume that they know the difficulties that people will go through, that they intimately understand them. And then recently we've launched a customer lab, which is where basically we get people to come in and we watch them when they try prototypes. We talk to them in a very open way and just ask them open questions, so that as people are designing things, they will design with particular people in mind, and then watch to see how they behave, so that we can see whether we've designed something that means, people struggle understanding a particular word, or whether a button's in the wrong place.
That's awesome. That's really walking the walk, I think, when it comes to being customer-led.
We're not there. We are not there by a million miles,
the foundations
but we'd like to, that's the aim.
Great. And I think another thing that you touched on there around specifically the rationale behind M-Cube was the AI piece, the fact that it's using AI to recognise documents and being able to take data from those. I read a stat recently that 75% of financial institutions in the UK are using AI, a lot higher than I expected, to be honest, but only 16% of the use cases for AI are material, have any kind of materiality behind them. What do you think are some of the things that are perhaps blocking the adoption of AI in specifically the mutual sector?
So the mutual sector naturally attracts quite cautious people. which is a good thing from a risk management point of view. But also, it's things like you have to be able to control where data's going. So lots of organisations, and us included at the moment, until you fully understand how the data is going to be used and therefore where the data is going to be going, you can't really do anything material. And I think it's one of those things as well where most people feel like they've got to try a few things. So, we all try chatting to ChatGPT, ask it a few questions, see if it hallucinates. But I think it's a challenge, and you've got a lot of people, as I say, who are really quite risk averse in the mutual sector. But there's a genuine challenge, which is, how do the regulators feel about how you're using it? What are the third parties? How do you contract on some of these things? And that's actually, contracting is one of the biggest issues with some of the fintechs, because they've never contracted with people before. And so everything you do for the first time is always takes longer, more time, et cetera, et cetera.
Yeah, uncovering those first challenges for the sector, I suppose.
Yeah, absolutely.
What are your thoughts on how the sector needs to evolve as a whole, and how the society is perhaps starting to move down the tracks with regards to attracting more younger demographic folks into the society? I
think organisations like Nationwide, they feel much more like a bank nowadays because they've got the current accounts. So, the really large building societies probably don't have quite such an issue from that point of view. But I do think we've done a couple of things that are attracting almost the passing of wealth. And I think that's the thing that we need to target. So, most people in building societies are over 55, something like 85% of people. But there's still a desire by those people to actually put savings into the building society for some of their families. And I think that's where the opportunity is, and the area that we really need to focus on, which is how do you support the issues and the problems with passing on of wealth through the generations. And things like powers of attorney are immensely complex, inheritances and that type of thing. So I do feel that, as I say, from a mutual perspective, where the younger generations then see the returns that they get, which are higher than the banks typically. I hope the combination of the mutual ethos. We know Gen Zs really like purpose as well. So I think there are some things, to get together with the governments wanting to double the sector, that we've got a real opportunity if we choose to take it.
That is really interesting. I'm keen to jump a little bit around and talk back on the topic of AI, and specifically where you think the role of AI might be in terms of making credit decisions. I know you touched on, obviously, the use case around assessment of documents, but obviously AI is able to make some of those tricky decisions or automate some of those decisions far more effectively. Where do you see that potentially taking the lending sector in terms of use of AI in making credit decisions?
I think when you've got relatively high volumes of predictive data, AI will be brilliant in terms of decision making, and it should absolutely over time outperform any person. Where you're starting, as we are with the sort of kind of specialist segments of where there may not be as much available data. These people may not have been able to get a mortgage, for example, without looking at this. It's going to be the combination of people and data and AI that is actually going to enable that sort of lending. And there are two things that we know that customers and brokers want. Ideally, they want a fast decision, but the most important thing that brokers want in particular is a firm decision. What they don't want is to be told yes or maybe and keep having to supply lots and lots of additional information. And so that's what we're targeting, both the AI element and also the customer element, so that we can give good decisions that we can stick with, even if it's a yes or a no, but that we'll stick with it because we know it's the right decision through that combination.
I suppose thinking more broadly about the role that building societies play in the community and from an economic perspective, do you see them potentially playing a more active role in commercial lending to businesses in the future, and what might be stopping that happening from a building society perspective?
So I think most building societies don't have the expertise at the moment. And the biggest issue for building societies is the cost of and the increasing cost of doing business, both from a technology perspective and a regulatory perspective. So, and the more products that you do, the more options that you have to have and the more support systems you have. What we decided is that we may well go into something like business banking because it's very purposeful. And it would be business banking, I think, rather than commercial. So we see commercial as sort of bigger organisations that can probably get lending much better from many of the large commercial banks. But I do think there's a lot about the smaller businesses where they're trying to set up the business or grow their business, and you can do it in a much more community-focused way. So I would like to think we'll get there, and I do think it's a good way of proving that building societies aren't just about mortgages. But as a sector, we're going to have to make sure that we have the capability. And I think if we can lend to extraordinary borrowers really successfully, then it's not so much of a stretch to move into that business sector as well. But we have to prove we can do that really well first before we move elsewhere. Yeah,
one step at a time. I think that's really interesting. You touched there around the cost of running a modern mutual. There's a lot of things to balance, I suppose, when it comes to regulation, technology. I'm keen to get your thoughts on what that means, what that looks like for yourself as the CEO of a increasingly modern mutual. How you balance the challenges cost-wise with running a modern mutual.
It's a real challenge, and basically, what you're essentially trying to do is outrun the costs with the income growth. And that, again, can be quite a challenge. Obviously, I think most of the societies will monitor what the sector, different organisations in the sector do. And when we did that last year, in 12 months, the lowest growth of costs in a building society was 7%, the highest was 18%. And I think that demonstrates the rate at which you need to increase your income if you're going to keep outrunning the costs. And lots of people think that as you build more technology, things will get cheaper. And I'm afraid it doesn't work like that. The more you have to use technology, the more you need to make sure you're cyber and resilient. The more that you've got to continually do upgrades to make sure that you're not falling behind, in addition to the sexy and innovation types of things. So there's very few organisations, if any, that I've seen where the tech cost goes down. And then, in larger banks, you then see the people takeouts. But in most building societies, there's not a big amount of efficiency, if you like, that you can particularly gain from that. So for me, it's all about, can you create this customer experience that means that people are happy and willing to pay a bit more because of the great experience they get and or the innovation that you're able to offer them is different to others.
Yeah. Are you able to talk through some of the things that you've perhaps had to trade off to maintain that sustainable balance when it comes to the cost of running a modern mutual?
I'm not sure it's a trade-off, but what I would say is that the reason why we haven't developed more of the propositions than we have for the last couple of years is that we've been upgrading a lot of the systems, the core systems. And the question that everybody always asks me when we do it, so we've been doing this over 9 different systems. And the question people ask is, what am I going to see that's different? And I say nothing. But we're going to be more resilient and we're going to be in support are the types of words that we use. So I guess the trade-off is there's quite a lot of money, focus and resource that's required and stops you from then doing the sexy stuff because you need to make sure those foundations are in place. So I guess that's a trade-off.
Very interesting as well, given the recent news at M&S and Co-op in terms of cyber issues and operation resilience issues. How is Nottingham Building Society focusing on ops resilience, and what are some of the things that you're putting in place there?
So we're looking at our operating model, and we've invested more already in resources in terms of cyber. We have had a number of attacks, like lots of people have, and touch wood so far, we've been resilient. They haven't breached the firewalls and that type of thing. But we are looking at an end-to-end 2-year programme of activity, which includes everything from training, initial induction, and the systems capabilities that we have to make us as resilient as possible, and then from an ongoing basis. So like everybody, we are putting a large amount of investment into this, a huge amount of focus, and personally, I feel dreadfully sorry for Marks and Spencer's and Co-op for what they're going through, because it's really quite terrifying about the impact it's had on them both in terms of the customer data and the confidence that people have, but also their ability to trade. So, you can't underestimate how much you need to focus on this.
Yeah. It's another one of those not particularly sexy outcomes, though, isn't it? It's important foundations that need to be laid before you can get to the really exciting.
Yeah, to be honest with you, that's the foundation, and then everything else comes behind it. I'm smiling because we've actually got a new head of cyber, and one of her great joys is that she sends out phishing tests to try and test everyone to see whether they're going to click on them or not. And I'm afraid some of the executive have not done as well as others.
Yeah, there's always some interesting results off the back of those, isn't there?
Absolutely, and you know at some point that you're going to fail, so you need to make sure you've got the backstops.
Cool. I think I'm keen to switch us back towards lending specifically. And you mentioned earlier some of the extraordinary borrowers that you focus on, and we talked a little bit about first-time buyers and expats and your propositions that you've got in that space. Are there any other segments that you think have identified in terms of underserved segments, something that might fit into that extraordinary borrower category that you're starting to think about, starting to look at ways you can serve those folks?
Well, there are anybody who basically doesn't have a regular monthly income, or that's only part of their income, is one of the main things. So people who've got multiple jobs, some of the people that we researched with, for example, one person was a teacher, but he also earned as much money, but in a very regular way from his blog. And so banks don't know how to deal with that on a general basis unless you hit wealth management, and then that's a whole different ballgame. So there's also things like people, lots and lots of people, obviously now contractors, but contractors don't have the same work patterns. So contractors, the types of propositions they need are potentially having months off paying the mortgage, so that for the months that they decide not to work versus the other months. So it's those type of things. And then another one is the business owners. Their income is very regular, particularly when you're starting up a business, some of those challenges. And the reason why we did the foreign nationals first is that was something we could do with the capability that we had. We realised that other people would offer the opportunity for a mortgage, but not until they've been in the country to gain a full credit history. So what we're looking for is areas and segments of growth where there are difficult to serve people that we think we could serve well.
Awesome. And moving on, I suppose, through the lending journey, one thing that tends to be a real problem if you're buying a house is the conveyancing journey. And it's something that at the moment building societies don't really have a huge amount of control over. Do you think they should? Do you think there's something there that building societies could do to improve that conveyancing journey, or do you think the solution lies elsewhere?
No, I think I've tried to address this actually in a couple of organisations. So what we're doing at the first point is just to address the application process through to completion. Next, we need to look at the life stage. And when I say through to completion, it's completely opaque. Nobody's got any idea what's going on with the solicitors unless they pick up the phone on a general basis. And in another organisation, what we tried to do was to create a sort of track it of where is my application in the process. But once it goes to the solicitors, because they don't typically have very modern systems, then there's the land registry, there's the surveyors. Post-COVID, the surveyors have taken longer to go out. So I think there are lots of opportunities, the more automated valuations that you can do, there's PEXA, who did some very interesting things and really narrowed the time to completion in Australia. We are one of 10 banks who've actually got an account with PEXA at the Bank of England. So we're definitely going to get to it, but we just need to focus on one thing at a time, I think. Yeah,
understandable. I'm keen to finish off, I suppose, on the branch network. And it's something that a lot of banks are focused on closing down branches from a cost-saving perspective, while most building societies seem to be holding the fort, so to speak, in their local communities, oftentimes being the last branch standing in their particular communities. What is the society doing specifically regarding the branch strategy? What's your focus when it comes to branches?
So the strategy previous to me coming in was everything under one roof. So they were offering lots of different services. When we talk to members, when we talk to the colleagues in the branches, that felt a bit uncomfortable sometimes, keep sort of trying to offer all these different things. It's difficult to keep up with it, but also the customers didn't really want it. So what we decided to do was pare it right back. And so we ask 3 things from branches. 1 is grow your savings. 2 is be something in your community so that you really have a community impact, and that's how you build the brand in the community as well. And the 3rd one is please just get some great service, because that again will be brand building and it'll bring more people back more often. And the reaction of the colleagues to just asking them to do those 3 things has been absolutely exponential. Having said that, we, like everybody else, see transactions reducing. And when I first started, a lot of our branches were actually in the wrong places, as in they didn't have an area of population where there was an opportunity to grow. So some of those branches, all of those that we actually closed, had less than 10 transactions a day.
Wow.
And you have to put at least 3 people in a branch. And so it's immensely boring. So we closed a number of branches in one go, and then we've maintained the ones that we've got. We're investing now in the brand. We're opening a new one in Nottingham City Centre in Clumber Street. That opens in June. That has all the new branding, is much more modern and inviting, and it's in the right location in Nottingham as well. So that's what we're trying to focus on. Will we open more? Probably. What else will happen? Don't know. But as long as people use the branches and they're adding value in the communities, then, that's what it's all about for us. And we also like passbooks. What we're trying to work out is how you marry technology with passbooks, because I know some societies have removed them, and I understand why, because there is some cost to them, but the members love them. And so what we are trying to do is listen to the members and try and find ways to get the best of both, which is, as I say, technology enabled passbooks, but we haven't come up with that answer yet.
Yeah, it feels like a very interesting problem to solve.
Yes, absolutely. I'm going to give it to somebody else.
Yeah. Passbooks tend to be the most divisive topic of conversation with building societies, and I'm excited to see who comes up with the magical solution to solve passbooks. Yeah. Feels like a very interesting place to end on such a divisive topic. Passbooks, should they stay or should they go? One for another time maybe, but thank you very much, Sue. It's been super insightful and a pleasure to have you.
Thank you.